Good afternoon, everyone. David Paul speaking. It's about 3:15 on Friday, the 8th of June. I'm looking at VectorVest UK, and I'm looking at two shares. One that I've been talking about for quite a while, Persimmons, and another mining stock called Anglo that I have some shares in. I used to work for them. Both shares are undervalued. Both shares have got a high relative value, which measures the price appreciation potential over a window of 3 years into the future in relation to a AAA rated corporate bond, and they're both excellent. Relative safety of Persimmons is excellent. Relative safety of Anglo-American is fair, hardly surprising after the biggest bear market in commodities in recorded history a few years back. And both moving up the page, both in buy recommendations with VectorVest calculated stop losses. Now, I've charted these in my normal format, ladies and gentlemen, and my normal format is quite simple. The share price itself in candlestick format, earnings per share, and as you can see in Anglo, earnings per share growing here. And the green thick line above the candlestick plot is our valuation. As you can see, the share trading significantly below the VectorVest valuation. Remember, the only way to make the money in anything is to find the value of something and then pay less for it. Similarly, if I go up to Persimmons, there's Persimmons again, earnings per share rising strongly, and the share price in candlestick format, the little blue line is the VectorVest stop loss. And the thick green line, again, are valuation. So the share significantly undervalued. Now, I am primarily a swing trader, so I really enjoy these swings in the market. But nevertheless, in terms of long-term trading, these things can be quite difficult to handle. Both in terms of drawdown and both in terms of the emotions of these red days. So at VectorVest, we've come up with a technique that smooths out the ups and downs and allows you to stay with the main trend. The technique was put together by the founder of VectorVest, Dr. Bart Toledo, to trade the American Gold Bugs Index known as the Huey, and it's got a temper on it, this thing. So I'm going to put up the layout. It's called the MIDAS TOUCH. It's a standard layout on VectorVest. Now I click this, I immediately get the MIDAS TOUCH layout, ladies and gentlemen. Now what is it? Well, very simply, it's a 10-day and a 65-day moving average, not of the price, but of the VectorVest stop loss. Now the VectorVest stop loss is loosely based on a 65-day moving average of the share price. Now, so largely it's a moving average of a moving average, which gives a double smoothing. So there's the 10-day moving average of the VectorVest stop loss. This is the 65-day moving average of the VectorVest stop loss. And ladies and gentlemen, when they cross, that shows the start of a fairly substantial trend on the upside. Now, the pink thing down below is the VectorVest RT, but it's a smooth version of the RT. It's a 40-day average of the RT. And ladies and gentlemen, when the RT comes up through 1 and these two lines cross, we've identified the start of a very strong trend. And these trends persist for quite a long time. If I put this up over, let's say, 18 months, and we can see that we had this market, Persimmon, starting here, and the two moving averages cross. The RT40 comes up through 1, and that's the start of a very strong trend. And all you've got to do is to keep your eye on this and ride it up the page as long as these conditions are met. And there you would have gone out, gone to cash, and gone back in here again, and we'd be sitting, and we've smoothed out all of the noise. So in terms of position trading, it's an unequal technique. I'm now going to go down to Anglo, and there's Anglo. It's a share that I know very well because I worked for them, and I was given some shares a lifetime ago in Anglo. I think it was still listed in Johannesburg at the time. And as you can see, the 10-day of the VectorVest stop and the 65-day crossed, and the RT40 come up through 1, and that was a signal that there was a strong trend starting, and that trend of course is still in place. The share price is significantly up there. We could have been in cash, or for those brave souls, you could have actually made some money by shorting the market in this period. But if I go a little bit further back, we can see that many of the hedge funds in Mayfair would have in fact saved themselves quite a bit of money. Many of them were short right in this period on the upside here, and down here right at the bottom of, I think, if it wasn't the longest bull market, a bear market in commodities in history, it was the second longest bear market in commodities in history. And it bottomed out just here, and this was a move in Anglo from £3 the whole way to £12. Now those are life-changing moves, ladies and gentlemen, and the trick of them is to try and ride them without the market kicking you out. And I'm reminded of a great line out of Reminiscences of a Stock Operator. Those men, it was a chauvinistic age, those men that can be right and sit are uncommon, and the MIDAS Touch is an unequaled method of smoothing out all the noise and sticking with the main trend. You can try it on VectorVest. We've offer a 30-day trial of VectorVest for a £5. If you don't think it's the best £5 you've ever spent, you can have it back with the greatest of pleasure. Have a great weekend, everyone. Bye-bye.